Market correction is confirmed with a major breakthrough. Buckle up, it's going to get a little choppy. Stay tuned, we're going to discuss this and much more. Hello, this is Michael Loftus with Wealth and Wisdom TV, where education is the key to a successful financial future, which education is something we need right now with this volatile market. But before we get started, don't forget, click show more for additional information and links. And if you find this video of value and are looking for a different opinion, that of Wall Street, please do consider subscribing. First up, let's get to the big charts. Okay, first up, we're going to show a chart that I've been looking at all year and talking about this box we have been stuck in. Well, guess what, folks? We have just broken through this box. Here I came in this morning, think we'd have a bounce after being so oversold last week. And at this point, it's Monday morning, mid-month review. We have, in fact, broken that box. We have seen a volatility index spike as well. So, not a good thing. Let's take another look right here at the short-term chart again on the daily. When I take a look here, what do we see? Well, a couple things. Momentum down here, crossing over. Not a good thing. Remember we talked about that? And yes, in fact, one of the reasons I was neutral going into last week, it crossed over. The death cross. A week ago, we had the death cross in the S&P daily chart. Not a good thing. And relative strength. Yeah, of course, there's no strength in this market right now. All right, so now I'm going to look at the weekly chart. What do we see? Well, again, we talked about this. This is one of the reasons I went very conservative about a month ago. That negative crossover is ugly. Okay, the other thing is, obviously, we're still below the trend line of 15-16. Not a good thing. And most importantly, you can kind of see it in here, but we had a death cross on a weekly chart as well. Folks, that's not good. Really has me concerned right now. How about the next view, which is going to be our monthly view? This, as of today, is still my only positive signal. And you can see here, here's our trend line from 09, and we've had a pretty severe break of that. Now, I always say we have to wait till month end, but there's a couple other things that have changed on the charts since last week. Number one, you can see it right in these two spots here. That's momentum. Momentum is really crossed over at this point. And here's the other thing. We've gone below zero for the first time. You can go back in 15 and 16. And the last time before that was our last, of course, meaningful crash in 08-09. So let's get on to some international charts. Now we're going to talk about international and emerging markets. We have big news over there. We're going to talk about that in a few minutes. But first, we're going to take a look at the charts. And we've been saying this for a while. So we are now officially in a bear market in an international. This is your EFA. Okay, you've got Germany, Greece, Italy. I'm not going to go on and on. It's ugly over there, folks. So global synchronization, we've been talking about that. It really just does not exist. Next up, we have emerging markets. Emerging markets are the BRICS: Brazil, Russia, India, China, Spain. Okay, when you look here combined, okay, you're down 23% from the high. Clearly in a bear market. You know, all this talk about tariffs and everything else, China has been in big trouble since early in the year. Hasn't even been affected yet by tariffs. So, again, this global synchronization has already started to break out months ago, and now the U.S. seems to be catching up to that. So next up, let's talk about treasuries. When we look at treasuries right now, I've been talking about this as far as yield spreads. 10-year treasury minus 2-year treasuries, which is called yield spread. And if you look down here, we actually hit a low of 0.11, the lowest since 08. Okay, and we did move up just a little bit to 0.16, so tiny, tiny improvement. And for those new viewers, I want to remind you the reason this is so important, we've been hearing more and more about this, is this chart right here. Each time we invert, go below zero, okay, and you can see it in some of these areas here, okay, we head into a recession. A recession is the red area right there. So again, now the thing is, you got to remember, if we invert, it generally takes 6 to 12 months, but that seems to be where we're setting up right now based on a lot of data. Next up, what keeps me up at night? So a few weeks ago, I showed this. What keeps me up at night? And there's several items. Tired bull market, right? This is the longest bull market in history. Earnings and revenue. Peaks. We're seeing peaks everywhere. And rollovers. The Fed. Big decision this week. I mean, I personally feel they're going to raise this week. And I don't see them stopping into next year because they need the ammunition for the next recession. Corporate debt. This is an issue that I'm going to get in more in the next video, but a big issue that a lot of people are not talking about. As of today, 14% of companies on the S&P will not be able to pay their debt load in 2 years because of rising rates, right? Everyone borrowed money, and now that money is becoming more expensive. Big issue. We got to watch that. And of course, political and geopolitical. There's a lot going on there. Not going to get too much into that. I think we read enough of that on the newspaper. And then here's one chart I'll show in this section. The Buffett indicator, Warren Buffett, corporate equities to GDP. And it's pretty obvious to see the highest ever was 161 during the dot-com because valuations were out of control. And you can see in 08, we were down in the 120 range. And even with this correction right now, we're at 151%. Big issue. We're still overpriced. Now, let's talk about tweets of the week. Tweets of the week are tweets and articles that I find interesting. We've had this gentleman, he's actually a German economist. Draghi says QE is PATS, don't know what that means, of ECB's permanent toolbox. The bottom line is this. Last week, the ECB finally announced that they're going to stop QE, which we stopped a while ago, and they're stopping as they're heading into recession right now. That is going to be something to watch and is going to be an issue. Nordman Trader, great follow as well. Remember, I've got links to all these below. NDX, which is the NASDAQ 100, up 10 years in a row, reached its limits in 2018. Disconnected, excessive deviations do not last. And you can see it right here that he has circles, all these up, and at this point we call that a hammer, right? And it's going down the bottom end. And one of my favorites, Lance Roberts, again, we have the link below. Stock market's death cross is particularly bad news this time around. Bank of America says, we talk about that. Now, I showed the death cross on the S&P. We've had it on the NASDAQ 100, small caps, and mid caps. So again, that is an issue. I talked about that last week in our Tuesday top charts. Next up, what's on my radar? So right now, we've got 7 of 10 sectors in correction mode, meaning down 10% or more. So there's not a lot on my radar today. I'm definitively more in a defensive stance right now, but I keep getting asked about gold. Now for me, gold, you're in or out. Why? No dividend, no earnings. You make or lose money in gold. And I base that, if you go back, this is going back to 2009, a daily chart based on death crosses, 50 over 200, golden crosses, that's a good thing, 50 above 200. And if you look here, each time, there's your death cross, get out. There's your golden cross, etc. And you can see it as I have all these various charts here, in, out, in, out, in, out. And right now, we are still out. But I will tell you, we are getting very close. Now I'm going to zoom in here with a closer chart. So this is your daily chart over the last year, and you can see, right? There's your death cross back in June or July. But we found a bottom, okay? And then what I'm looking for is there's a high, here's a high. So you have a series of higher highs. That's a good thing. Now, that being said, here's your 50-day right here. Okay, so I'm going to wait to see that. That's that golden cross. I want to see price continue to improve before getting in. So we are down to an 8 in fear and greed, 22 2 weeks ago. Not surprising. Our signals are short-term negative, mid-term negative, and long-term right now, I'm saying neutral with a downside bias. And you can see why. If it were the end of the month, we would consider that negative. So we have time. I don't see the Santa Claus rally coming, but this is a great time to manage risk, mitigate risk. This is what we do. That's why we're in so much cash right now. That's why we're hedged, meaning short in the market. So a week like last week, we really were able to mitigate a lot of those losses from last week for our clients. So as always, thanks for watching. This is Michael Loftus, Wealth and Wisdom TV.